little out of place as far as the time of year. You usually see me in December. Now we're almost into March. And the reason for that is there's a new pronouncement that had to be included in this year's audit called the GASB 75, Government Accounting Standards Board number 75, which is the calculation of liability for something called OPEB, Other Post-Employment Benefits. This is a number that comes from the state. The state hires actuaries to calculate this liability, subsequently gets audited, and then gets disseminated. The state was very late in getting that information, so we normally present this report sometime in mid-December. We were ready to present the report in mid-December, but we had to wait until the state gave us the information, which was about 3 weeks ago, or almost 4 weeks ago. This information doesn't affect anything to do with your planning, with your decision-making. If you remember a couple of years ago, we had to include something called GASB 68, which was a similar calculation for pension liability. And that had to be laid over on top of the financial statements. But this is not part of your budget process, not part of really anything that you have control over. However, it is a transparent, but it is a good number for people to know what's out there. And I'll just let you know that that calculation for this district came out to $116 million. That laid on top of the pension costs, which right now is about $186 million. So these legacy costs that have been actuarially calculated is over $300 million. Again, you're not going to have a bond for that. You're not going to have a mortgage for that. But these are the costs that are associated with the employment. So back to what you can control, and as you said in your report, we have a clean audit opinion. The audit opinion, if you have it in front of you following along, is on page 911. It's slightly different opinion this year because of GASB 75. GASB 75 require us to have a paragraph in there to talk about the change in accounting principle, which is implementing GASB 75. So we have an unmodified opinion, clean opinion. We have another report, which is a report on internal control over financial reporting and compliance, which when you have a government audit, this is a report which is required. We don't render an opinion on it, it's not required. However, we do a review of controls, test of compliance with state and federal programs, state and federal guidelines, I should say, and we found no omissions or errors. A third report is the independent auditor's report on compliance and report on internal control over compliance for major programs. If you're a government which receives and expends over $750,000 of federal and or state money, you need to have something called the single audit done, which is a specific audit of those grants. There's a federal section and a state section, and this district had both. Specifically, this year what we tested was the reimbursed TPAF monies on the state side, and on the federal program side, the IDEA Part B preschool. So we do a separate audit of those, more of a drill down. Federal state agencies want that because they know the size of your budget, that perhaps these grants won't get looked at as well they should, and so it's a separate item. And again, we had no comments or recommendations.